Hey everybody, it is December 31st, 2020. So, everybody's doing some retrospective kind of stuff, and I'm no exception here. But I wanted to take a look at some data points that I've looked at before on the legal roundtable and everything, as far as, how the economy is performing in certain aspects. So what you see here is the chart of the S&P 500 over the last 10 years. And you can see that obviously we are in the coronavirus recession area right here. And we had the big drop, obviously, in March 2020, and then, a V-shaped bottom, a rebound, and back up to all-time highs. Of course, that depends a little bit on which stocks you look at, but, S&P 500 is broad index. So, the high flyers are dragging everything up. So what you might have seen before if you watched the Leo roundtables is that if you look at this graph and normalize it for the Federal Reserve assets, um, it's a very different picture. So I already have the line inputted here. And this is the St. Louis Fed system where, it's the Federal Reserve database, basically. So we just divide one by the other. So we're taking S&P 500 index divided by assets, total assets of the Federal Reserve itself, which means how much they hold on their balance sheet, which is how they monetize and create new money. So very different picture. We can see pretty much no growth between 2011, coming out of the 2008 crash up until 2017. Then the stock market started to pick up in proportion to the assets at the Fed. And then we have the March crash with COVID, and it's recovered slightly, but not much. So, when we look at, just the S&P 500, and we compare that, so that, that steady rise, and compare that to the normalized, you can see that a lot of that growth has just been based on monetary inflation. And it's monetary inflation that has not come out into, goods and services, which is what everybody's worried about when they talk about inflation, but it has all stayed in the capital markets. So, prices of stocks go up, prices of real estate go up, prices of bonds go up. And, we've seen that in the compression of the yields over a long period of time. But so, like I said, if you've seen the legal roundtable, you've seen this chart before. But what I wanted to do in addition to that was actually to look at real estate. And specifically, this is household owners' equity in real estate. So this is equity above and beyond, mortgages. And we can see that, coming out of the 2008 crash, it was low, low, low. Incidentally, this is when I bought my house. it was a great buy. But, and up ever since then. It's, basically 2.5 times, down from 8,000, I guess that's 8 trillion, up to 20.4 trillion. But we can do the same kind of comparison. So we have household owners' equity in real estate versus total assets. We divide one by the other, and boom. So now we see we actually hit a peak in 2019. I mean, the absolute scale doesn't really matter. It's just the relative changes. Peak in Q3 2019, and then on downward since then, and dramatic downward since the COVID hit. And again, that's because of all the the trillions and trillions of dollars that have been printed. So one thing I looked at the other day was if we look at M1. You see this enormous spike going from 4 trillion up to 6.7 trillion. So let's say 6742 divided by let's see 4078, and that's a 65% increase in the M1 money stock from March or February. Beginning of March 2020 up to now. Now, as far as what M1 is, M1 includes funds that are readily accessible for spending. M1 consists of currency outside the U.S. Treasury, Federal Reserve banks, and the vaults of depository institutions, travelers, checks of non-bank issuers, demand deposits, that's, checking accounts, basically. Other checkable deposits which consists primarily of negotiated order withdrawal accounts at depository institutions and all credit union share draft accounts. And yeah, so basically this is spendable money. And that money, a large part of it has gone into stocks, bonds, real estate. And that's been keeping those prices high while everything else has been kind of deteriorating. So this is how it works. And you know don't be lulled into complacency with high stock market prices. A lot of it's gone into Bitcoin, which if you're a Leo finance kind of person, then you're probably benefiting from. But things are still rough out there in the Main Street economy. It's still millions and millions of people unemployed, and we just had the $600 stimulus passed here in the U.S. They're fighting over the bumping that up to 2,000. At the moment, it's looking like that's not going to happen, but we will see. So that is kind of a snapshot of one angle on the economy, and yeah, hope you find it useful.